The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Hi guys, David's on vacation and I'm John Logan. I'll be filling in for him today, and I do a show every morning from 8 to 9 called the Global Market Pulse, and you're always welcome to drop by and check out what we're doing there. We're usually covering some of the things affecting global markets. Don't totally always focus on stocks. That being said, the major market indices globally, some of the currencies, some of the metals, some of the usual suspects of the commodity world that's affecting things, in my opinion. And we also use a scanner that we've developed that I've been a big part of, and that is kind of a very useful tool for me in particular. And the scanner's coupled with something within the scanner. It's actually a product that has two major things in it. One of them is a breadth indicator, which is a major market indices type balanced or imbalanced situation that I'll explain a little bit, hopefully as the show goes on. And then also the ability to filter over 2,500 different instruments and hopefully distill them down into some attractive opportunities that may be of use on a day-to-day basis. So let's start off the show here with something that is really possibly on a lot of the TFNN subscriber minds here. And let's just pull up gold. Let's just get right into it. We talked this morning about gold, and we talked about, and here's the weekly situation on gold, the current contracted gold, and those unfair lows on the weekly are at 1169, and we've reached a low today of 1172. So we're getting close to almost having some technical breakdown pattern on the long term, and those weekly unfair highs are at 1218, 1219. What do these lines mean if you're watching in the den, or if you're watching on eSignal or on your mobile phone and viewing what I'm talking about here? These are profiles, and these are our automatically outputting algorithms that define where the fair auction is, or where the where the balanced or imbalanced areas are. And hopefully we'll, in a guiding type of manner, be able to hopefully help you regulate a trade if you're long or short, or not even in the market right now. And as we notice that weekly on gold and being just almost at the precipice of having some issues on the long term, here's our daily. And we talked on the show this morning about just sitting tight and waiting for gold to get a close, hopefully above this 1199, 1200 area on the dailies, and then maybe we'd be able to at some point get into the 1218s and maybe even higher. And a lot of folks out there may be saying, well, God, why do you want to buy things that are going up and possibly sell things that are going down? Sometimes you need a confirmation move to get out of some of these highly trafficked areas and get into the data sample set that's a little less populated, if you will. It's the best way I can explain it. If you're looking at the show, these profiles here are really the meaty parts of the bell curves. If you're looking at a normal distribution in statistics, this blue line is the mode, this red line is the upper limit based on some information that we compile, and then the green line is another outer limit of the so-called fair auction or the balanced area. So when you get outside these areas, you're talking about a imbalanced move that hopefully price action will move relatively quick. And we were, that's a 5-second dissertation on what we do. We've got some long versions of that, but if you caught some of that, it's not brain surgery. We're looking at these areas to regulate the trade. And what we talked about this morning was let's get a close and let's clear above this 1200 and maybe even above the 1218 area, which was the weekly unfair highs, 1219 rounded off, just to kind of get some conviction that gold may be doing some technical damage to the shorts. Now, we've been looking at this trade on the short side for a while, and I mean for a while since we started breaking down below weekly unfair lows around 1300 on this month's contract, and then the dailies have really been something, to keep that in mind, that the long-term trend's been down. But recently I've actually turned a little bullish on gold because we started, migrating above the 1200 and the 1218 area, at least temporarily, and looking at these kind of compressed areas of consolidation in those normal technical analysis type outlooks, which are kind of flags and pennants and that type of thing. But we wanted to get going above 1200 and hopefully above 1218. I've already said that, but we haven't had that happen. We've kind of been sitting on our hands. I haven't been a big fan of going short gold. So sometimes you just got to sit on the sidelines. And right now we're right in the middle of that daily fair auction. We're kind of trying to get below that weekly. So we always remember that weekly takes precedence over daily, over 240, over 60 minutes, over 30 down the line. And that being said, if we start getting down below the 1170 general area, 1169, and especially this week have a close below there, even though we've got this kind of daily Custer's last stance sitting here at 1153, that's going to be something to pay attention to. And in that, in that moment, it's going to be, to be honest with you, okay to be short, not okay to be long down here. And if you're looking at the charts I'm showing, hopefully that will, just in the 5 or 10 minute dissertation that we gave on this trading concept, that will hopefully make some sense. And the only way we could start nibbling on the long side is to get back above the 1169 area. So right now you could look at this as a buying opportunity on gold. I don't like the recent action in this. The dollar hasn't been helping. So again, we haven't had any confirmations on the long side to really kind of get, buckled in and put on our long hats and put the stops in. It's kind of been a wait and see, and we've been talking about that. So as I'm mentioning that, I want to kind of peruse into silver. Silver's been a relatively weaker instrument, and here's the situation on silver on the daily. When we had these profiles appear up top here, that's actually a relatively bearish sign when we have profiles appear above price action. And that being said, silver really has been, not a long candidate by definition. And here's the weekly situation. So on silver, as I enlarge this, you actually have more resistance areas to kind of pay attention to on silver. And then when we had that profile appear above on the daily, this has definitely been not okay to be long, okay to be short, not okay to be long situation on silver. Gold is kind of hung in there just a tad better, actually a lot better. But let's take a look, as I talk about that, let's take a look at the dollar index, which has kind of been on fire. And we talked this morning. Here's the daily situation on the dollar. And we talked this morning as we were kind of getting up into the 89.61 area. We talked about not selling that. I mean, that's not a resistance area to me. This is something to be broken. We had a close above Friday. And then if you can see this, we had a retest today coming back down into former resistance, now support. And we're above profiles, and the long situation for the dollar continues. And again, looking backwards, that's easy to see. I'm aware of that. What do you do now? So we talked this morning about some stops oriented around the 89.61 area on the dollar, and therefore going back into gold. Gold is priced in dollars, and the stronger dollar is, not exactly that good for gold most of the time. So that's the outlook on gold and the dollar relationship. And as we look at some other currencies that are being affected by the dollar, we're going to kind of hold off on that, and I'm going to bring in one of my partners from Europe to kind of go through some of the currencies with me. And we've talked a lot about currencies lately, because on my morning show we want to have you want to try to trade the things that are in play, and maybe the trades that are a little less risky. And some of these some of these currency trades, being that you've had some central governments or some central banks, if you will, behind some of these moves, you don't want to stand in the way of them. And it was very analogous to what's going on in the Treasury market. So, I'm going to pull up the Treasuries, even though the S&Ps are climbing, and we're at all-time highs again here. Let me just pull those up so you can not have to believe me. But actually, let me see. Friday's 2076, and today would reach 2075. So this crowding action here on the S&Ps, we're going to talk about the notes and the bonds in just a second. We talked about not selling these resistance areas up top on the weeklies. We talked about waiting for it to migrate above and possibly buying the breakouts. There's not a lot standing in the way of this. And, as traditionally and historically, take this for what it's worth, the latter half of the month of December, if you just do a seasonal trade on the S&Ps, that has been a relatively bullish situation, statistically speaking. I think over 80% of the time or something. I forgot what figures I read. But, things don't have to always work out like that. But you've got some statistics on your side of the fence, too, when you look at that particular trade. So that's the situation on the S&Ps. So after seeing that, let's move right into the 10-year. And, I've talked till I'm probably blue in the face about this one. This has just been literally just the classical disconnect of what it normally does, in the past, when I say the past, pre-2009, 2010. 10-year really, we talked about, 126.06 sitting here on the daily as support, and also this is the March contract, but we talked about 126.06 and 127 general area buying support on that still until we're told differently. I think you've got to still buy treasuries. And I don't I don't know where this is going to end. I don't know how the experiment's going to end about the Fed stepping in and trying to save the stock market every time it ticks down. But, if you play the buy support game on the bonds, notes, and the S&Ps for the last couple of years, you've been pretty much 100% correct. And as we look at this area down here, 126.06, and then the breakouts possibly above 127, you just got to go with it as a trader. Where do you put the stops? In my opinion, the intermediate stops have to be below 126 on that type of trade. And then as we look at the weekly on the March contract, all bets are completely off below 125. So you've got some decent support there, and you've got some, turn the rents the same way type situations every day you go to work with this product. This may be the less riskier trade than trying to go along the S&Ps right now, because, as S&Ps go up, 10-year seems to go sideways at the worst. And as S&Ps tick down, you get an explosion of treasuries every time from the fear factor that the Fed might say something, to coddle investors. And, hey, we're going to treat this with kid gloves, and we're going to come in and save the day, for lack of a better way of putting that. So we're going to go to break in just a second here. When we come back, we're going to take a look at a couple of stocks that are just in the news today, and how do we trade those things, and where's the support resistance level. So we'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived to subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. David White is off today, this week. I think next week, actually. So I'm filling in for him. I'm John Logan, and I do a show called the Global Market Pulse. Every morning from 8 to 9, you're always welcome to drop by. And what we've got on the screen right now is BlackBerry, BBRY. And I love BlackBerry. I've got a BlackBerry myself, and they may have missed the train. But, God, I love that product. It's great for business, but whatever. I'm not here to advertise BlackBerry. We're here to talk about charts. 904, weekly unfair lows. Last week, during the announcement, we hit a low of 910. So that weekly support, we talked about possibly, whether this was let's look at the 940 area pre-market. We kind of drifted lower than that. You're always, in my opinion, it's always a decent idea to wait for these announcements to come out and then kind of trade the reaction instead of the action. And when we got down into that 904, reached a low of 910, and then we kind of got back above 940, then the DMZ, if you will, was kind of mitigated, and you're back up into the fair auction. And now we've gotten all the way today up into a 1054 unfair, 1051. We're trading 1054 right now. So we've kind of accomplished our goal to reach up into the top of the balanced area from the bottom of the balanced area on BlackBerry, and we've got some help with Navigator here. But if you've kind of been playing that game, you've made about a 15% move from the bottom of the DMZ right now. And even though we're kind of clearing some of the hurdles on the 240s, as we're showing right now, again, I think you got to take a look at this from a possible taking points off the table standpoint, and pay attention to this, because this stock may need a chance to gather itself, and then if we start compressing around here, consolidating around this unfair high, we could move higher, but we could bounce off, or we could pull back off of it. So BlackBerry was one of the things we looked at the other morning with a little bit of a long stance, and that's the way that works. Here's Gilead. We want to take a look at this. This is definitely a stock in play today. This has been the darling of its kind of area for a while. A lot of people have been hyping this for a long time. This is a great reason why to get out before some of these announcements. And we have just gotten crushed here. What was that, about a 15% move down today, maybe in Gilead Science. So here's the unfair lows. This, if you're still long this thing, you know this will be wishful thinking to get back up into the bottom of that profile. But here's the situation on the weekly. On the very long term, I think you got to look at long-term stops, in my opinion, have to be below 91 based on your appetite for risk. And we may shoot for this because we had touched this before. We got close to it today, and that's kind of the Maginot line, if you will, for Gilead, just to pay attention to on the very long term if you're not already out of this thing. Do you buy it? I don't see a lot of reasons to start accumulating this until we get some new information on our 240s. And if you take a look at our scanner, I'm going to show that next after the next break. That's something it kind of guides you through this based on when the momentum may start turning, even on the shorter term time frames. Got to take a look at IBM. This one's kind of drifted higher here. Here's the weekly. This is the big number because we got a new profile in the weekly on IBM a while back, 162.49. We've reached a high today of 161.91. So we've gotten very close to going back and kind of, things don't go in a straight line down. I'm still relatively bearish on this stock, and we've had some, breakdowns previously on the dailies here. But as we kind of go farther north, you've got a big number to get through on the weeklies. And remember, weekly takes precedence over daily over 240 on the line. And this is almost, in my opinion, a possible selling point resistance at 162.49 if we get there this week. And where have we been last week? We've been as low as 150, 151 on IBM. So we've had a decent rally, and it may be time to start looking at this again from that particular inflection point on IBM. I got to pull up Apple really quick before we go to break. A lot of, guys have this in their portfolio. Here's the daily, here's the weekly situation. Not a lot to talk about there. Here's the daily. Hasn't really participated lately in the rallies of the S&P, and the there you've got to close above or sell resistance off of is 114 even, pretty much, on Apple. We're going to go to break, and we're going to come back, and we're going to talk about some of the global currency situations with a partner and friend of mine out of Europe. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show, and we're going to get into a little bit of a currency paragraph here, and I'm hoping that we've got Edmundas Katinas from Europe on with us. Eddie, are you there?
Yes, John, I'm here. I like your show. I listened what you just said. Your analysis was perfect. Not just I'm pulling your leg or something, but yeah, that was great. Go ahead, man. I'm here. Yeah.
Thanks. Now, this is the Oracle of Moscow. So what we're going to do is we're going to talk about the ruble and oil, I hope. And Eddie, I've got the ruble up right now. What's your general thoughts on this thing from a fundamental and technical standpoint? And how does oil bleed into that? Because we can get into oil, while we're talking about this, I'm assuming.
Okay, just a little bit about the ruble. Few notes. Yeah, as you can see, and your viewers, they can see our chart. That's daily, right? Our chart led us to our chart that led us to the multi-month support areas and distributions actually showed us precisely. We've been lucky by market how it acted. It gave us pull-ups and retracements. Every retracement was at the near or at distributions of profiles. And since beginning of this instance, geopolitical changes in the world with the Ukraine conflict, we've been led to the very good, solid, long trade, long dollar, short ruble. And now, of course, this volatility, 25 handles in a couple of days.
Unreal.
Unreal. Yeah, but it led us to the I wouldn't, we didn't held the longs all the way up to I was actually advising our clients, Russian players, to get out of the long dollar short ruble at 72. But, well, it popped up another, volatility spike into the 80 ruble per dollar. But, hey, who can money that to? You take money. Nobody got broke, taking money out of the table a little bit earlier than.
No, they did. Not going broke, taking over 2,000 pips in one day is what you did. So
yeah,
I'm never going to argue with 2,000 pips in one day. So that's make your whole year in one day type move. So
let me share one story. How other investors kind of done differently. It's not our investors, but the big boys here in the game. It's like everybody knows. You probably heard the investment fund PIMCO. And the PIMCO happens to put opposite position on the ruble. It's an emerging markets bond fund. Those are that information crossed news wires in Bloomberg just a couple of days ago. PIMCO's 3.3, I'm just quoting, 3.3 emerging market bond fund had been the hardest hit. It held 803 million of the Russian corporate sovereign bonds. Of course, they didn't hedge it against ruble, but, and also they had ruble calls. So, short calls, of course. And these guys, I think they could have been smarter a little bit, and they probably about us.
I don't consider you and I brain surgeons, but when we talk about going into not emerging markets, but any foreign market, convertible bonds or their version of treasuries, whatever, we always talk about, okay, it's a very attractive little scene when you've got a 10.5% Russian 2 or 5 year or whatever. But we always talk about, how do we hedge the currency risk? I mean, because even somebody like you or I, not a PIMCO level, Goliath. I mean, we're not going to go in and do that trade unless we can go in and hedge the currency and also think about how do we get out of that currency based on the spreads. I mean, and sometimes you and I have been talking about, how do you convert rubles to Hong Kong dollars or euros or whatever? It's expensive, so
qualifications of those guys. I might agree with you there. Of course, they know what the hedge means. Probably they know the definition of the hedge, but they use a different kind of not ours, analytical services, right? They say, hey, sorry that we lost that 800 million. Oops, it happens. But it's just only one fund. Yeah, we have our larger funds, but this fund is kind of got hit hardest. Fine, yeah. What they do use different analytical services for the hedging. They definitely had a hedging, but if they would use our services, they probably could not afford us. You ask too much, Johnny, for that they probably couldn't. Yeah, that was the case.
That must have been their Wild. That must have been their Wild Wild West fund. Right.
No, seriously. Yeah, they definitely misjudged direction of the ruble. They had a wrong understanding when to hedge, what position to take, even though the explanations that they take strategic time frames that do not fit in the picture, because the strategic time frames that we do take with our analytics are based on weekly profiles, and the monthly profiles, they exactly show direction of this particular instrument. And exactly what they done, what else they done, they lost their money as well. They misjudged direction of the oil. You can show another chart and apply our tool. So if you're
we're going to take a look at oil in a second. Let me just bring up our scanner here, and let me just kind of let everybody know we have put the ruble in here. And as you can see, this is kind of patterned directly after our desires, Eddie and I and a couple other folks in our company. And as you can see, there's yellow cells, there's gray cells, there's red cells, there's green cells. And that yellow cell in our weekly column right there, I'm going to pull up our landscape chart here. You'll see these yellow monikers at the top, and that's letting you know that this profile on our weekly ruble may change by the end of the week. I mean, I know it's only the first of the week, but it gives you all the inflection points right in your face here. I'm for highs, I'm for lows, blah, 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 on down the line into the 60-minute time frame range, and we Eddie and I talked about how much money we're spending on server capacity to run this thing. There's a lot of instruments doing calculations for this right now. But the ruble, that yellow cell, as I mouse over it, it's going to give me the current profile configuration, which is obviously well below what the ruble's trading at now, and also the inflection points on the daily, which are right at 55.30 right now, which it tells you plainly that we're sitting right there. Basically, as you can see in our landscape view, we're kind of sitting right above those daily unfair lows, and that's that yellow cell. Going back to what I was going to say, Eddie, and I've got way off track again. Here's the weekly, and this yellow bar is indicating that yellow cell and that yellow bar is very similar, and it's saying that we may have a new landscape appearing by the end of the week. And that's really powerful on a long-term basis to have some new inflection points to key off of. But right now, Eddie, as you were saying before, what do you do here? I mean, we've talked about how stupid PIMCO is, and we've talked about a little bit about the ruble, but what do you do now? I mean, we're sitting right at the unfair lows. We've kind of, done this little dance below here a little bit, but we've poked our head back above. Do you buy this?
I was gonna ask you to since you've been analyzing the weekly chart, I was gonna ask you to put up a daily chart. That's what you exactly did. The weekly and daily, we're having yellow lines, right? It's a classic formation, classic stuff. In adding the extra volatility, it's a screaming buy. Why screaming buy? Because price came from above into the profile, tested top of the profile 2 days to the tick, broke inside of the live profile, and got into the historic profile. One historic profile, if you have a chance to explain to your listeners what that means and viewers. But historic profile is the closing a little bit above historic profile and on the line of our profile. This is screaming buy. Adding the volatility, yes, adding the percentage of volatility here. This is this is screaming buy. Technical, probably, and still fundamentally. Fundamentally, nothing has changed. That was a massive panic during these couple of days ago. The dust settled out. Technically and fundamentally, ruble is still weak. Russians saved the financial system, banking system in the wake of, at the cost of economy. They jerked up the rates 10 handles, 7 handles, right? 10 years right now at 17.5. Rate, and corporate bonds, some of them were crossing wires. 200% annual. Economy is toasted and is not going to sustain any long money. It's long money, it's expensive. Short money is expensive as well. And unless China and Russia real quickly will not find some kind of solution, sort of BRICS funding of the existing economy, we still going to have recession, definitely. We still going to have inflation is going to go through the roof. And, this screaming buy right here, technically and fundamentally, right at this point. That would be...
Folks, Eddie is very, very close to the pulse of what's going on over there. We do a lot of business in Moscow, of all places, and we were concerned about the business we were doing there. And Eddie actually speaks about 6 languages, one of them being fluent in Russian, and he grew up in Lithuania, which was back then. You know what the score is with the mentality over there, and with Putin, an ex-KGB official, it's not far from going back to the old days somehow, I guess, with the mentality. What happens? What happens if there's a Madoff in the wood pile over there? Do they just execute people like that and throw lime on them, or what? Do you think there's any of those things going on? Because this is obviously a move to flush out some problematic trading, if you know what I mean. What's going on now with the ruble? It's large spreads in order to exchange it. Ruble banks stretched out spreads up to the 8 handles, 800 pips, so about 5% on one side, so about 10% spread. Yeah.
But things are calming down a little bit, and no capital controls. You can still wire some money. Why I'm saying that we can still wire some money. One investor liked to add more money to our managed accounts, as you probably know. I'll inform you, and he's getting without a problem. He just waits until exchange rates will flip. So no capital controls, but again, I believe so. There will be surely a big, unhealthy applications of high interest rates towards the Russian economy, and they will happen very, very soon. As far as John, you've been in Lithuania when you've been visiting me a couple times, and you still. I remind you one more time, probably you flew over with a hot air balloon of the center of the city, which probably the rare citizen has the ability to do so.
I remember it well.
I tell your listeners, I'm a hot air balloon pilot, professional pilot, sports type of pilot, not commercial. But John came to visit in Lithuania, and we flew up on a hot air balloon. We lifted off from the center of the court in a big, nice old town and church, and then flew through the whole old town over kissing the
good old days.
Yeah, good old days. Good old days. Well, John.
Okay.
I hope I answered your question about Russia, about rubles. Yeah,
you did. Let's take a look at oil, because I know we've had some questions about that. From a fundamental standpoint, do you think that the Russians are going to start just blitzkrieging, like maybe with OPEC, like start selling on the open market, almost just to kind of gather back cash or whatever? Technically speaking, I know where you and I are. Here's the 240s. This has kind of regulated the trade down, if you will, and allowed me and you to find inflection points to sell breakouts on the downside and sell resistance on the upside. Here's the current 240 landscape. Do you see this thing turning around at all?
No, because of Russia will keep pumping and keep selling, and China accepts it, and China buys lots of Russian-denominated ruble-denominated oil. But what's Bird whispers the word on the street is, if we would catch this in this segment, is that about the oil? Oil is the easiest trade. Again, like a ruble was, if your listeners and you see that, it never had a chance to buy it because it was below profiles, it was below technically and fundamentally. Fundamentally, sometimes fundamentally you can start betting against fundamentals and you get broke, and the cow comes home, you can keep buying this stuff, and then it keeps going up, but no reason. But technically, it's the easiest trade. I think, easy part is it's over because price is stabilizing there. We're going to have some choppiness. Perhaps fundamental, demand will kick in place. But I was going to tell you, about what whispers the bird. I told you 2 days ago when you asked me to, or 3 days ago when I was last time on your show, that I'll tell you some insights about what's going to happen in Russia right now, what's the next move in Russia. And I'll tell you.
We've got about 20 seconds, and I'd love to hear about that after this break.
Okay, John.
Is that cool? Yeah, we got about 10 seconds.
Cool, yeah.
And also, I want we got some listeners asking if you think that the Russians will ultimately start selling gold and affect the gold trade even more so. So we'll be right back, folks, and we'll try to get answers to those questions when we come back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Hi, guys. Welcome back to the show. Got about 4 minutes. Eddie, are you still with us?
I'm here, John. I'm here.
Okay, cool. We're getting ready to get into, fundamental thoughts on gold. Somebody was asking about, do you think the Russians will start selling gold? And do you have a thought on that one?
Yeah, I do. But before I say so, I would like to have my 2 cents on oil.
Okay.
Our profile was a new profile was established on December 18, and the low of that profile is 60.86 of the crude oil, and therefore, because the price was substantially below at the time when profile formed, there's a few implications that only you and I know, but we can share with listeners. When profile is way above the current price, that means our algorithm catched a timing, but price was too fast. Too fast down. That means the product or oil at this point is weak. It's extremely weak. When it's going to go up, we don't know. When our algorithm finds out enough buying versus to match the selling, then we will have the timing of appearing of the new profile. Only then we can decide if we, on this time frame, on daily frame. Meantime, it's at December 18. At the $60 and $6.75, there is a current resistance and condition coming from our profiles that oil is very weak at this point.
Sounds good. I tell you what, do you have any thoughts on that gold question?
Oh, yes. I can tell them, I can give also my opinion about this because as promised last week, I talked to some people close to some people who close to another people. So, nice. The bird is whispering that Russians are having ready, to pull the trigger and start selling the gold reserves if another turmoil is setting. That's what you have. I think the Russian leads into this oil sell-off because, the sell-off start baking in the price action of Russians' possibility of throwing at the market its gold reserves as a second option of equalizing and stabilizing the market activity. That's the latest word on that. So that's why the gold actually start going lower. Right.
And that we talked about gold a little earlier. I got to apologize to everybody. I had a January crude contract up a while ago, and I've got February up now. We had I just mistakenly typed that in earlier, right before the show, and the numbers on February crude oil, are 55.11 down below, and that's on the daily situation on Feb crude oil. So that's kind of the Custer's last stance. You got to orient stops above and below that area, and like Eddie said, this product's more than likely going to traverse south. Got about 45 seconds left here, and talked a lot about a lot of things, actually, currencies and gold and crude oil and things that are moving the market, some fundamentals. Eddie, where are the S&Ps going?
S&Ps are Johnny neutral.
Okay. And we're sitting at weekly unfair highs. We can't seem to get through there. I think that's going to just probably be maybe a matter of just time. We talked a little bit about historicals of December earlier, Eddie, that we may drift a little higher just based on almost 80% of the time at the end of December we just kind of drift up, and then we're going to have to wait and see what happens. We've had a tremendous move, obviously, and can't keep going up in a parabolic move every day, so we're going to have some rattling around here, folks. Eddie, thanks for coming on today.
My pleasure.
We've been doing the David White Show today for him. He's on vacation. I'm John Logan. This is Edmundas Katinas. We'll be back again tomorrow morning at 8 o'clock. Thanks for joining us. Tom O'Brien is next.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.